Is the bear market rally over? That's the big question that we're going to try to respond today and see what happens in different stocks and ETFs and indicators. So let's start with SPY daily time frame. I'm going to zoom in a little bit and we can see that SPY today was down a lot, 2%. It's now the stock is below the 5 days double exponential moving average, below the 50, below the 20 days, and it made this little gap here that I think it will fill up at some point. Why? Well, what I'm thinking here is that the price is going to reach this level, which is the peak of the volume at 395 and a half. I think we're gonna reach this week, and then from here, what can happen? From here, I think that probably we are going to bounce up. Meanwhile, these 50 days double exponential moving average will flatten a little bit more and will start to turn down. That's what I'm thinking. Now, the indicators are pointing for more bearish action. If we look at the MACD, is completely crossed to the bulls and is falling down. The RSI is completely going down. And also, if you look at the other side, that's what I was saying in another video. That's like a head and shoulder, and there it is. It played out. It break here, so there is downside momentum now. So the bears in this particular time of the year are in control. The PMO curled and now is crossed to the bears. So not a good sign. SPY as of right now is definitely bearish. We're gonna see and retest this 395 area, and then from there I will make another video and we'll figure out what is going to happen. If we look at the Qs, there it is. Pretty much same chart like SPY. So we can zoom in and we see that we basically went below this low. We have a very small gap over here, but overall we are going back to retest this channel, most likely to retest the peak of the volume over here, this in this red line that is 283. The indicators like SPY, the price is below the 5, below the 50, below the 20 days double exponential moving average. The 5 days is about to cross to the bears for with the 50 days double exponential moving average, which looks like to me it's flattening and probably is going to curl down. Now the MACD that we can see here completely crossed to the bears. The RSI is going down, and even in this case, it made kind of a head and shoulder. We can see it played out fairly well here, crossed this line, and then it's free fall now. And the PMO is not yet crossed to the bears. Actually, yes, it just crossed to the bears today. So bearish price actions. The bears are in control as of right now. Um, let's see. We can go and take a look at the VIX, because the VIX, like I was saying in a few episodes or few videos ago, the VIX is ready to spike, and sure enough, it made a gap up today. There it is. All the indicators for the VIX are pointing to a bullish price action. Why? Because the price of the VIX is now crossed to the bulls. It's above the 5, above the 20, above the 50. Everything is crossed to the bulls. So the VIX is bullish. And when the VIX is bullish, usually SPY and the Qs, the major ETFs, they are suffering. And the MACD is crossed to the bulls and just now is going above the zero, which means that the VIX can really spike up. The RSI is pointing up, is going up, and the PMO is crossed. If I can open it, it's crossed to the bulls again, and it's going straight up. So it doesn't look good for the bears in the VIX and the bulls in SPY and the Qs and all the major players. Um, let's see, the I want to see TNX, the 10-year treasuries, because there is a direct correlation, and I was saying in many videos that I did before that this looks really bullish. It was outside the channel, it went back in, it retested it, and here basically we had a cross from of the 20 and the 50 days double exponential moving average. Everything is straight up, the price above the 5 above the 20 above the 50. So everything is bullish, as well as the MACD that is cross to the bulls and pointing straight up. The RSI is also bullish, and the PMO is also bullish. And remember, I was saying there was a bullish divergence with this low and this higher low and this low and this lower low. And I said, when there is this divergence, it will play out at some point. Sure enough, it started to play out really well. Where will the 10-year treasuries, where they will stop? Well, if we zoom out, we don't have any volume profile on this chart. So, but the important thing is that we basically crossed above this important key level. There it is, because it was the previous stop. We're now above. Um, so we basically went above this level of previous resistance, and now we would probably go and fill this gap up here at what is this 41. So there is another $2 move for the 10-year treasury. It's interesting. It's an interesting time to be alive. So overall, this is looking again not in favor for the bulls or for the long at the moment. The bears are starting to be in control. Um, just gonna ask you, if you like this type of video, to leave a like, a comment, and subscribe to the channel. That will help me a lot, and we'll just